This is Alan Farley from FX Empire. Salesforce.com got up to about 195 in February of 2020 and then sold off during the pandemic decline, dropping to a 52-week low. It returned to the prior high in July and broke out, carved this rising channel for a few weeks, and then took off in this very strong impulse, topping out above 280 just a couple of days after being added to the Dow Jones Industrial Average. Now, it's been a corrective mode for the last 5 months, gapping down and filling this prior exhaustion gap in December when it announced the acquisition of Slack. That transaction won't be completed till the end of this year. Now, the stock's been testing the 382 sell-off the 382 rally retracement and the 200-day moving average for about 2 months now. It's just gapped off of that level, come up to 50-day moving average resistance. A breakout above this level into the 230s will set off a preliminary buying signal, and then be another buying signal if we go and clear this gap and get up into the high 240s, and a final buying signal when it gets up above the opening print of this big exhaustion gap bar from back in August. So I think the stock is really starting on the recovery trail, and it's going to probably pick up a lot of ground into February 23rd earnings. However, it still requires a lot of patience. Long-term shareholders may want to pick it as a very low-risk area right down here if they're thinking of holding it for at least 6 to 12 months, because I think we could get a breakout, perhaps not before the second half of the year. But this has been a market leader for a number of years, and I don't think that Salesforce.com is done quite yet.